So today is March 9th. I think we're going to remember this one. Definitely remember today. Haven't seen a lock limit down. I'll look for any response. I haven't seen a lock limit down in over 10 years. I think it was the financial crisis. Anyone could comment on that. It's been around. I'd have to say that was lock limit downs were a lot more common in the 80s and 90s. And then they moved the collars years ago. And now we're hitting it. So let's start with, we're looking at a chart of crude oil. It's probably actually a great place to start. Yeah, Horham election night, that was true. That was the first one. And then 2009, right, Bob? You're right. I do remember that one. But that was it. And it's, they were used to be a lot. 500 points used to be a breaker. So, I think 2000s now. And let's start there. This is crude oil. The crab pattern. We started talking about that last week. And so let me just really quick show. I found a pretty good article. Yahoo's not the greatest of websites, but has a lot of good links. So what are we looking at? We're looking at right now, NASDAQ is down 410. Well, you're going to look at this relative. Okay, where are these relative to the harmonic numbers? Our big retracements, our big 50s, 382s, gone. But in terms of price, the Dow's down 1,255 points. And S&P minus 145. So this will open back up in 26 minutes. And we're going to look at the breakers today because this is crash. This is crash day. And, it's going to be another crazy week. I think if you looked at the individual days last week, has not been a week like that, I don't know, even on a percentage basis in a long time. Plus minus 4% moves back and forth is, that's almost a precursor. Yeah, definitely, Nick. No, the commodities in the old days for sure. You get coffee or orange juice, lock limit up or something like that. Very common. But I want to just look at this brief, section of this article and just think about, let's plant some numbers. And we're going to, this is talking about S&P. And I think the S&P is a great, even though NASDAQ's been moving just unbelievably, S&P is just the classic index that I think, is the benchmark for everything. And so I think relative to everything we've talked about, we'll stay with S&P, but let's plan a couple numbers in our head for today. We're down 145 at 28.19, 28.20. We're below our big targets, and I'm going to go to the chart in a second. But this will not open up. It's going to be an amazing open, and it'll open up at 9:30. Now we're talking about if it falls 7% down to 27.64. That's not a lot. You're only talking 50, 60 S&P points. Another, quarter, 25% of what it's done already. That's 27.65. You'll stop another 15 minutes. I think that's possible. I see this loading up. There's like 13,000 contracts at the ask right now that will just open up and flush this thing. And then, so we'll pause for 15 more minutes. And I think that will happen rather quick, maybe before 10 o'clock. We probably will get another breaker to hit and another pause. So then what we're going to look for, so that's 27.60. The next level, 25.85. I think we can just do these in almost, rounded increments. 27.65, 25.65, although it's 25.85. You get the point. Yes. Just wanted to show this article because Again, I'm going to give you guys the link for it, and there's better articles out there. But just because I received an email this morning, what do we do? What happens? What do we expect? And I thought it was a great place to start. So, and again, we're there. We're going today, this week, but today for sure. We're going to probably, and I'm going to lay it out. I think we're going to do full 886 off of last year's gains, and we'll probably do it, give it back in a crash type situation. We're just going to have to target those numbers. But from the breaker perspective, really what we're talking about is what we're looking for. I'm looking for another one to hit, and 27.65 is not a problem. But if we get down to say 25.85 or lower, or we get to this number, 23.77, that's it. I really think that 23.77 number, that's the number we want to look at from a breaker perspective. It's going to be absolutely amazing. This is why we do what we do. If this doesn't get you going, you know, nothing will. But I really want to look at it from that perspective. And then we're going to look at the daily retracements on S&P in a second. But think about it this way. If we're down 20% today and we get to 23.77, that sounds crazy. It's double. It's 450. It might happen, in a flash. Let's take it in chunks. As I always say, we're going to first look at 27.65. But let's just say this is an absolute catastrophe because of crude oil. And all of the other, I think a lot of these other markets, but the crude oil move, we will look at that from a pattern perspective. So 27.65, folks, 25.85, 23.75. We go down, get to that 27.65, then down another 200 and down another 200. Think of it that way. Now, let's really quick, let's look at this. I'll come to crude oil in a second. We are already at that crab pattern on the daily, and there's a whole bunch of things happening on this crude oil. If that's the case, today's terminal day, right? Today's terminal bar. So we know we're doing nothing on that. But let's go to S&P. I'll dial back really quick because I want to do the big retracements. Remember these two? All right, so last week and the last couple of, really since this started falling apart 2-3 weeks ago, we said, what are the possibilities? And we just said, let's take it off of the 18 low. Because we knew once we start breaking down some 4-hour, we failed a couple of 4-hour levels up here. We were looking at something much larger. We had a really nasty check back that happened on Friday, and it failed. That's a failure. And so all of this is headed back down. That's why we have to look at this larger chunk. And I said, there's really just two places that I want to look. And I'll redraw them. And now it's really just one place that I want to look. And it matches up with the breaker for today. Let me get that spot on. We're talking about the 886 off the December retracement. Down there. Our 50%, this is the BAM principle, folks. The bat action magnet move. Now this does have a bat pattern formation to it. And it's kind of tough to see. Mathematically, this stuff works like that. Even if you can't see the pattern, it's kind of difficult. I'll stretch it out for you, but mathematically, just follow me. It does still matter and still structurally fits within what we're looking for. So you have that would be your X, A, B, C to there. Even though as tight as that is, now come down much lower again on a 1-to-1 ABCD. We start doing just simple ABCD, throw in the towel on the 50% at 28.60. That it was 28.67 to be exact. It had a nice strong bounce. and then right back. By Thursday, Friday, it just looked ugly. And we also knew that the check back, because we had triple confirmation, still had that final retest. And we can see that this needs more time. Look, Amplified's the one to look at. Amplified RSI. As long as that keeps going back down into the oversold, it's going to take more time. And it's going to happen quickly. I mean, we're going to open up, your 28.19. So let's look at the levels. Remember those breaker levels for today. Okay, here's 27.65. That's about there. Then just take it 200 lower. So 100 lower on that one. 27.65. Then 25.85 is about there. Interesting that lines up with the 1-to-1 general projection. And then finally, we get down plus 20%, our 886. Let's straighten that out. I don't think that's exactly 24.40. Really important that we just stay on these daily intervals here. Yeah, it's about 24.40. Sorry. And still, this is how we can line up these minimum projections. Looking at, all right, give us some kind of idea where this is going. We knew this thing was in trouble. Really, let's go back to the 4-hour time frame, because now look at that. Let me bring the patterns back in. That's what we do. There you go. Yeah. Really quick, on the 4-hour time frame, something that is also kind of troubling, gonna need more time. We're gonna see this open up down, of course. And let me get out those others. But I still have been relying on HSI to give me those areas where, even though the market may look like it's going too far, too fast, it's still giving us reverse signals. This is another one. This one having just giving us an overbought reading at a very low level is something that, step back again, it buys you more time for this downtrend. I'm going to hold in here. It's 9:15, folks. We're going to go, we're going to take our time here today. Still have 15 minutes till this opens, and I want to get to gold and crude oil. This really got kicked off by the Type 2 bat from last week, or 2 weeks ago. I wanted to show that. And this thing has just continued to accelerate past target 2. Let me bring up, we had originally put this up on Twitter a few weeks ago. And this is a home run scenario where but let's just want to kind of highlight really 2 of the most important concepts of that. Is that this is a secondary test, and we had confirmation. And that's, that home run scenario here. We're looking for target 2 at 29.44, came in all the way down at 29.20 with HSI. Recovered on Friday, but now with today, you're failed. And you know what? This would not have been a bad spot at all to get out of that trade. And that's something else that really, that's exactly what we look for. That was something as part of the 4-hour time frame. Looked pretty constructive on Friday, but is now failing. And again, here's another situation. This is a lot like that pattern that we were looking at a couple weeks ago, much higher, that was failing its target 2. This is doing the same. This is why this larger move, this larger breakdown is telling us more is happening. This, first of all, the type 2 reversal within the trend, huge. That's a huge, now huge continuation pattern, but it's giving us, flashing us signals that there's still more to go. And so that's why we kick up to our higher time frames, look at those possibilities. And again, I'm going to say 2765 really quick. 2560 is this ABCD for sure on S&P, and then again the 2380 is the circuit breaker, and 2380 again is this big weekly, just that big weekly retracement off the December low. What about 2440? Sorry, your breaker is here. Breaker is right there, right at the right back at that low. Could we, and wouldn't be surprised to see that kind of take out the low, but it's really, again, I'll come back to another chart that I posted and I'll wrap it up here. This is the big deal with S&P, no matter what, is that there's still a lot of room to fall. If this is really going to be a crash, we're going to take out that trend line. There's a lot of work that needs to happen. And if it's certainly, okay, the 886 at 2440, we'll be looking at that. But I'm not gonna, we're gonna bring back the same BAM principle and everything. If this is gonna unhinge completely, there's plenty of time, folks. I do, really, I think we're gonna see it. Just amazing. We've got 10 minutes. NQ, let's get to there really quick on the, again, let's look at the monthly. For this, the 382 was what we were concerned with, and that was about 82.60. Okay, two places I want to look. Certainly the 886 here is another extreme downside target. We're down 410. We're down 410. So, we're not even at the 50% level. Here you go. Let's do the spread. Here's 50% level at 7,800. That's a really solid number for today. I would want to look at 7,800. That puts us down another 200 plus on NASDAQ. And again, you're probably going to trigger more breakers. Let's see how that goes on the open. But absolutely. Nick, great article. That's a nice one. I saw that one on Bloomberg. I'll click it in a second here. And I'll bring that over. Appreciate that. So again, 7,800, 7,790, folks. That's our target for NASDAQ for today. Downside at minimum. And tomorrow we'll come back and we'll see if this is a total crash. You're going to give back everything from last year. That's how it is. Just get ready for that. The longer implications, a total meltdown, we're not there yet. But that would be a heck of a peak. There's a lot at risk here. Here's the other thing I do want to show is that both RSIs have rolled over. And when we go to, quarterly even, this is where the damage in the short term, let me get the HSI back up. Really strong short-term damage relative to the long-term is absolutely essential. If we're going to come out of these larger zones, amplified on the weeklies down there. I'm trying to fix my data. Not sure what that's, why HSI is not coming up. 1 second. Let me reset that. There you go. Couple things that troubled me though on the weekly. You see RSI amplified, they're down 7,800. I think that's minimum target. HSI is nowhere to be found, and that's a weekly chart. If we failed the daily signals and we still need another daily signal, which we do, this still has a ways to go. And again, we even have prior HSIs, which we know love to come back, act as support. You have to target this lower. 7,800's first stop. 62.70 I think would be our downside limit for now. I don't want to get to anything beyond that, but just everything we're assessing, and we really started hammering this last week, is based off of last year's move. Really quick, let's go to crude oil. Let's look at that disaster. But really not so much. This is what we actually looked at on Thursday. Was this big crab pattern type 2. This also limit down. And I will bring in Q the article. Thank you. So that's a great one from Bloomberg. I did see that. If you want to know really what's happening with the oil dynamics, there's a couple people in here that know a lot about oil. A few of you, if you could comment, would love it. Okay, we know there's an all-out war here going on. We know that this is a huge move, and from a harmonic perspective, okay, look at this monthly chart. So what does that tell us? We really know that we have to look at this type 1, type 2. This type 1 came up off of the hop. We're back down at the hop level. What happens if it fails? What do we look for? Go off of a larger retracement? All-time retracement? Absolutely. And there's only one. There's really only one. You could go off of the 91 low, which I remember, or the 98 low. But again, we're doing a whole bunch of resets here. And in my turn, really from a harmonic perspective, 886 is the reset, folks. Let's look at today, this month, this week. This is terminal bar. But from a longer term perspective, yeah, 25 is possible. Let's see, we're at the hop now. We would still need a full confirmation, weekly, daily, for an opportunity. I think the destruction is just going to take a little bit of time. Here we go. There's that. Remember that butterfly? We never got the type 2 on that. Well, now we're sitting on a crab. See out. What did that trade? That traded 27.34 in the pre-market. The 1618 is at 27.38. What does that tell you? And that all-time 886. So I guess I don't know why. Oh, that doesn't show up because of if it's monthly or quarterly. It's not going to show up because of e-signal. Here's the 5-minute chart. That might have been. I have to check my data. Sometimes the data can get really crazy with this. You get a misprint. So our big numbers is that we're at we're under the hop level. So no matter what, you would want to look for 4-hour, 60-minute signal. If that's a crash, you want to buy it, you want to stick right into it. Not yet. Couple comments. All of Russia's oil goes to China because it's so toxic that only China will use it. Yeah. And their strength is in the gas, no doubt. All of this was quite predictable when the base accords were into effect December. The warning started in June. Just small thoughts. Appreciate it. Essentially, this is a big power play. Yeah. And Russia's trying to squeeze out, and Saudis and other people in the U.S. and This actually also, folks, here's something that I really was starting to concern myself with. Here's a petro-based. We've seen a number of these petro-based currencies get destroyed. Brazil, real is done. And again, this is something where this is just one of many markets that I brought up last week where the flashing warning signs. And this one, here's another one. And we're at all-time levels. What is this? Failed bat. Kind of almost looks like palladium, huh? Target on this, and there's a whole bunch of these South American currencies. You know who I'm talking to. L. 540 on this one, folks, if not a total reset. You want to talk about resets? These guys are going to get their butts handed to them. They're still way overextended. Their currencies are probably need to come in a lot more. Brazilian real is just one of many that will go. I'll go over 540 is my target. And remember, I showed the Argentinian peso. Got that one is a prime example. Let's not spend too much time on this. Let's go to gold. What do we do with gold, folks? Gold's up to the PRZ, almost hit our number exactly today. 1712, folks. And this is why we use the software. Okay? I mean, really, this is why we use the software. It just is finding the proper harmonic levels. If we were going to manually draw that, we probably would be sitting there saying, and it still might become a bat, but the immediate opportunity for the gold and the absolute target up here at 1712 still in effect, actually going back into the overbought. And I would think gold would be up a lot more than it was today. Almost gold was forecasting this move. We saw heavy rotation. So now this is up 14.15. I'm still looking for some kind of inflection above this 1712 level, but look at HSI. Where is HSI in the mix? Not there yet. Amplified, overbought, still needs time. RSI going back into the zone. But that's been a really fantastic, this has been a great situation for us. And 1712, we've been really firm on it for quite some time. I'm looking at, for say, a 4-hour or hourly. This is where we start to look for, let's look for some stuff. Oh, hold on. All right, folks, we just got another, okay, this is why they do that. All right, I guess they cracked it open. It's 9:30. And we're locked limit down again. Hang on in. Sorry, folks. It's there's nothing anybody can do until this market open. It just yeah. So we just opened, and we went lock limit down again, folks. We went right to the 2760 level. Nasdaq's now 79.22. Let's hang on in here. What's everyone doing today for the crash? They raised the margins too. Anyone else have their margins raised? Yeah, this is really something, folks. S&P now minus 250. Sorry, minus 205. Yep. Hey, we have trading view. I'll get you the trading view. Yep, everybody's margins went up. That's what they do. We have the trading view, guys. Hey, Nick, no worries. Listen, you had short ETFs in your retirement account. Listen to me. There's plenty of time for this. This is just like the initial cut damage. The play, really the place was the triple TVX, was TVIX. TVIX is the triple volatility ETF. And this is where I think a lot of these guys, you're going to see a whole bunch of wipeouts. You've got a whole bunch of structured shorts. Oh, I looked at that 2 weeks ago at 75. But this is how this instrument moves, okay? This is the TVIX triple ETF. And again, I think it's crazy to see this, but again, this is really just something. Let me bring up the title. There you go. This thing never moves until it moves. All right, just to give you perspective, okay? That's on a 4-hour chart. Let's go to the weekly, daily, weekly. I mean, this is one of those ETFs that, people sell premium against. This kind of reminds me of like what happened to natural gas last year and a half ago, where it jumped $3 and wiped out funds overnight. I think we're going to see that too. Here's the TVIX. This is that Credit Suisse, of course, based in Nassau. That's in case that they run out of money and they can't pay you, you can't get them. Absolutely amazing. That's up there. What's gold doing? I gotta say, at least, so crude's up. Crude is off the low. Trading 32. I got it, what, 32.70 CL? Gold, 1681, 82, now up 10. Yeah, let me go back there. I'm going to hang in, folks, until this thing opens back up. We have about 15 minutes. We have to wait 15 minutes after that lock, so we got about 10 more minutes to go until this opens up one more time. And our next number is going to be the 200 number. So then in 15 minutes, this thing's going to open. And we will get trading. So let me finish up on these markets, and then we're going to circle back for the open. But gold here is up against major levels. On the weekly chart, 1712 is that big 886. And there's several things. Mainly this bat, same as the monthly. So I'm going to still treat that as type 1, folks. And look at this. Also, we're going to get confirmation daily. Where's the monthly stand? Let's look at the daily. Why I'm looking at it this way is because if gold's going to end its move, that will be correlated, in theory, to the other markets where most of the damage is done. If this is going to be an inflection point up here, 1712, 1725, that's kind of how I'm thinking on it. I'm looking for some confirmation. We're up here. Still, it looks like gold's still in a position to go higher on even our daily, and I'd be monitoring this day over day. Our target for a long time has been that 1712 level. Let's see if we get it today, if not tomorrow. With all three of these triggering. Thank you for the comment. Appreciate that. Yeah, I'll keep that. I'll take a look at that. So, yeah, the Dow's down 2,200. Absolutely. Let's go over there really quick. So far, we covered S&P. What's our big support target now? We went straight to 2760. We're looking for 2550, generally, 2580. S&P, we were looking for 7,800. We're there already. Now we're going to look probably 62. Let's break it down. But let's look at the Dow, because the Dow's another one that's been a good signal. We're again going off of 2019. The Dow's at 23,588. The E-mini contracts down 2201. This is amazing. 22,374. We can hit that 886 and give that back or then some. I think that's it. I think you know, as I think all of this is going to come back. All of these want to retest last year's lows or December 18 low, or at least give us an 886 down here. This one is a little bit better structurally, not great, but we can at least maybe look at a 1618 off the top. Let's build a zone. So 22,000, 22,240. The 886 is at 22,275. These might be areas targeting on the downside. But these are all headed lower. Look what on the weekly, that's yikes. So the market's going to open up. You know, we're still going to probably drop 100. You know, this might be a full 10% correction today crash, or if we go 20%, we'll double or more what we're doing currently, and we will lock it up for the day. I think that's, you know, really in this extreme circumstance, if we open up and this thing starts trading in about 6 minutes and can rally a little bit and give us some room, then it's tradable. But if we're just going to lock limit down, it's not tradable. You just got to step back. But I think we can set our targets and see how it goes. And for Dow, I think we need to target 22.5 as a minimum. S&P, really quick. Let's dial it back before that second open now. We're 2760. The next set of breakers are 2580. Yep, trading has been holding. So we'll target that 886 at 2450. No indication right now. S&P's down 205. NASDAQ down 675, folks, with more to go. Where's the 618 zone? The 618. $73.25. I like that. You see how HSI is actually, now we're accelerating, and when we go from 50 into that zone, this is where we can see that acceleration. 73.25. Those are probably the that's the next maximum limit here. Did we hit that? I guess we did hit that 77.90. Again, was it in the pre-market? Let me see. There's a crab. Lock limit down. I think that's a good example of requiring confirmation. And let me go over really quick. Yeah, I got to say, guys, some of these ETFs are not going to even be able to pay out. I think some of these, I think we're going to see if we're going to see, this thing be a domino effect, you're going to see things that you have never seen before. And this is going to happen really quickly. It's really a lot more quickly than we were looking for. Now, December 18 did a similar thing, but this is more severe already. Really quick, let's look at something else. Look at Japanese yen. This is dollar yen. This is something else to take note of. Let's go long term. This thing has fallen off a cliff. Big bat pattern on the weekly at 101. We're right there. But we don't jump in front of that knife. I just wanted to show it that that's a minimum target level that we've been anticipating. Without confirmation, though, we can see this drop another 500. And dollar index is, that's the other one we should flash up really quick. We are 2 minutes, not even, to the next open. 1 second. Guys, I'll try to go top of the hour today. Let's see how it goes. We are about 70 seconds. So let me just show dollar index before this happens. Dollar index is back down, folks, and did it hit? No. Look, beginning of the year, we were looking for the dollar to fall, and it popped against us for the first 30 days. 94.14 was a little consolidation in the zone. Folks, I want you to look for this now. Dollar index to 90 minimum. Thinkorswim suspended for the day. Wow. Wow. Thank you, Patricia. That's crazy. They might just you know what? Let's see where we are. 15 seconds to the next open. Let's get it over here. 15 seconds to the next open, folks. This might just be a TV show today. Scott, NBC? No, I wouldn't be NBC. Scott Berg News? No. Harmonic? NBC? No. Let's get to the 1 minute chart. Here we go. Are we done? Are we not opening? What happened here? Let me see what's going on. Let me go over to Bloomberg. Keep an eye on gold, folks. Gold's only up 7, 8. So we're halted completely. Hey, Nick, I don't know what happened to Damien. Is he still doing his thing? Well, we should be. Let me take a look, folks. Yeah, I got to think that we're There's going to have to be some kind of major announcement, some kind of major intervention. Take a look at, here's something very interesting. Let's look at euro. Let's look at some currencies while we're waiting here. Here's the euro, and again, look at what has happened on that weekly off the crab, and that now we're in the full return. Yep. Let me bring that up. There you go. Okay, get the harmonic patterns. There you go. 109.40. Looks like we're now ready to do the return back to 119 for the type 2. Keep an eye on that. That's been really tough because this thing is just a drag for, I don't know, most of last year. Let's go to the 60-minute. Nothing here. It's really not much. It's been kind of disappointing, that currency action. Yeah. Well, I think it was overdone. And I think the dollar is going to have to do some major stuff. Really fragmented currency market. You don't have, it's not really correlated. And you're seeing a lot of crazy stop run swings. Can't stand that. Here's euro pound. This is something I wanted to show folks. If you're looking for some action, 87.39 is our big hop level, and look at HSI up here on the check back. That's actually not a bad pair to be trading in a market like this. And that sets us up for a type 1. That's 87.40. Look for type 1, target 1. Down to 85.13. All right, markets just opened up again. Let's go there. Not sure if they should have opened up. So remember the big number, 77.90. I think we might have just hit that. S&P is open now to 20. The big number is 25.80. The spread on NASDAQ is just too thin. It's just all over the place. It's bouncing 30 points at a time. S&P make a new low. Okay, I'm going to pull up a 4-second chart. Not like you guys need any more excitement than today. Oh yeah, trading at 10%. I wouldn't be surprised if certain platforms did shut down. All right, let's hang in here. It is 9:50, folks. I'm going to go for another 10 minutes, and I think really I just want to let this settle out. I'm more inclined to be watching S&P because the spread, I mean, as crazy as that's moving, now it's starting to rally. You just got to let the big boys shake this out for a little bit. Yeah, there's 50 S&P points, and those are seconds, so that's 1 minute. Let me look at the really quick. Here's the 4-hour. And keep an eye on this on that 4-hour HSI signal. If that goes, that's going to be another continuation. Yeah, when the readings get crazy like this, that's just like obviously still down, and I would be looking on a very small time frame. probably in the next hour, I would just let this thing shake itself out. Here's an 89 tick. You guys know I like that. Looking for something. I don't have anything structurally. I would only trade off of something short term and be scalping. Be in a full scalp mode today. Against our larger numbers. I don't think if NASDAQ right now to me doesn't look like something you would want to play with. At least it's coming off these lows, which is that's the first constructive sign. So it's not a total loss here. It's going to be a long day, folks. It's going to be a long week, no doubt. Until NASDAQ gets a clear, better liquidity, okay, because you're jumping 10 points at a blip. Really, I mean, you go a couple contracts on that, it's thousands of dollars moving plus minus. And we've got a long way to go. NASDAQ's now minus 500. S&P minus under 200 now. The Dow under coming off the 2000. It was minus 2000, a bit more than that. This does not bother me. In fact, I want to see structure. I really have to see some kind of structure. It's not, and this is where you can try to catch a knife against the larger zones, our larger measurements that we were looking at, especially the weeklies. But this is such a unique day. Yeah, this is coming off those lows. Where's the daily? Take a quick look here. And again, I'm probably going to focus mostly on S&P this week. I could look at some Dow, but I just think the liquidity is in the S&Ps. We are, and I think it's also a good time frame to look at how we finish the day. Take a look at your software. Let's look at the HSI values, amplified values. Where does this finish today? And this would be the real kind of, the divergence we would want to look for. So let's take it like this. RSI is going back into the zone. We're looking for some kind of support target. Is it 2580? Is it going all the way to the 886? These are the questions I'm asking myself. If we're trading at 8,000 right now and the 886 on NASDAQ is at 6,200, at what point do I jump in? Those are the kind of questions I'm asking myself. I think, again, there's plenty of time. We saw last week the action was remarkable. Rebounding now after the lock limit down, and that's a really good thing. That just kind of relieves that crazy overdone pressure, brings liquidity back in, finding liquidity, if you will. NASDAQ's up 100 in less than, up 150 and 200, sorry, in less than 10 minutes. 7 minutes. Here's yep, S&P almost back at 2,800. Let's look at the 89 tick. I think we got enough transactions now. All right, first pattern of the day. Look at that big bat pattern up at the 886. That's at 2810. Going there fast. That's the kind of thing I would prefer to wait for, guys. Yeah, no doubt. The government's in there buying this up. The government let that first limit trigger and then they're trying to buy that. And that's actually not. There you go. There's the first bat. And look at how that went red. Where's HSI now? Triple. There you go. On the 89 tick. That's up there at, let's see here. 886 is 2811. What was the high? 2811 a quarter. And what's this look like on a 233 tick? I think a transactional, a tick chart, really great way to look at this from a liquidity standpoint rather than a time interval standpoint. On the 233 tick, there's HSI coming in the zone. We get the check back? No. That's straight off type 1. That's just moving. It's moving really fast for me, folks. I would not want to risk 10 point, 8 point stop run on S&P. I think I want to stick with the standard terminal bar confirmation. This could be a straight off type 1, no confirmation. Really quick, what's NQ, the 233 tick, look like? We're about 2 minutes to the top of the hour. We've been here the whole hour. There's a little HSI up here. Okay. 1, 2, 3 on the 233 tick. It's moving so fast though. Look, there's HSI at, you have to almost just line it up, look at the exact level. That's at 80.83. It's already down 25 off of that little check back. All right, but that's actually, we're going to still apply the same strategies. It's going to be super aggressive and be prepared for an immediate stop out if that happens. But look, we're going to look at it like this. That breaks the trend line. There's your check back on a 233 tick. Coming back. And you have to risk just that prior high. Right there at 89. It's actually, I shouldn't even be showing this. This came back and did the check back. It's moving so fast, my e-signal's not even keeping up on this. I've got too much showing on there. And dump 30 off of that little check back. But that's how I want to look at this kind of action today. Give me some kind of impulsive move, break the trend line, give me an HSI, give me a pattern. We have that bat pattern on the S&P. That exact 886 was 2810. There you go. Now here's again, let's look for this still type 1 here, but you broke the trend line. What do you do in that situation? I would absolutely say if you're in that situation in today's, let's say you took it right impulsively at the 886, not my kind of way of doing it, but I know people are willing to do that. I would still be running a tight management or even utilizing, once we break that primary trend line, something like that. I think you have to be super aggressive in the management no matter what. If anything, I would be looking for this to come back to the 2810 level. Here's the other thing, and I think it's good to kind of review this in such volatile market conditions. But here's the D point, and start counting 30 bars, folks. Just that's another way when we're in a trade like that, and you need limits. You need to define the relative limits for in such a crazy environment, because the thing could come back against you 50 points in a heartbeat in this kind of an environment. So what? We're 30 bars. We're plus 30 here. 15, 20, 25, 30's here. 30 bars is about there. And for today, I think this target 1, target 2, this gives us really, even for the morning, gives us some good objectives. I would still look for this as a type 1. As support. Let's say we get a bat pattern or something down here. That's how I would look at it. But at least we've got something to go on this morning, and we didn't gap down 20% and lock down the day. What's possible for today? Are we going to close negative? I mean, here's the daily, and I'm going to wrap it up on here. Couple things. Keep your eye on gold, folks. Gold doesn't look like it's acting in a crisis mode. In fact, it looks like it's kind of rolling over. And we're very close. We're already in that zone. So I would expect the acceleration of gold to start to slow down. 1712 is our top level. Just like that bat pattern that we saw on the 233 tick. Let's go back here for a second. This is the same as we have on the weekly on gold. Same kind of a thing, or monthly on the gold. And even a nominal rollover, a nominal reaction is what I'm looking at for gold. S&P looks like, yeah, really having tough time getting up. But keep your eye on gold, because today could be the day. The end of that gold move for now. Again, 1712, we fell just shy. But we're very close. Look at this 60-minute continuation signal. So keep an eye on that. Maybe one more test higher, but gold should be up 30, 50 bucks in a catastrophe scenario. So that's something I do want to pay attention to. Now S&P is rolling over. NASDAQ, not much. Go back to your tick chart, folks. Nice. Your platform's back again. Your margin, that's good. I'm going to stay with S&P here below that 80 on NQ. That HSI definitely put a nail in this little uptrend. And yeah, here we go. Still type 1, type 2 material, folks. Now we're rolling back over. Again, for this move for right now, today, you just want to look at those large zones, the lock limit zones. Our prior, think of it this way too, the prior lock limit of that 2760 is right about there. And that's also an area of support. So if we don't hold that 2760 on this retest, we're coming down. We're in a type 1 here. There's a nice crab. I would target that 2775 level. End of the type 1. Where's HSI on the 233? Didn't register yet. Remember I was saying look for some kind of maybe bullish pattern for the return? Not there yet. And HSI hasn't triggered yet. Nice. Great, Nick. Yeah, the gold move has been really just spot on harmonically. Here's 89 tick. Oh, look at this on the 89 tick. That's even better. Look at these patterns on the go to the 89 tick, folks. 2801. Do we get down to 75? We didn't get down to that 75. Didn't officially get to target 1. I would target this for the retest at the 886 at 2810. This thing is on its way now. We didn't get down to target 1. Let me go to the nice 89 tick crab. I think this is the one to be focused on for today. 233 tick and 89 tick charts on the S&P. We're coming up into this type 2, this target 2, up at 886, up at 2810 for the full retest. Let me see here. Do I think there'd be a phone call between the Kremlin and Washington today? I don't, probably not, Nick. You had 2 Forex positions, Euro and CAD. Well, we know the story on Euro. There's just a massive rebound. $233 tick did give you that bullish crab. Now here's our, yeah, look at this thing come back. Here's the retest on the 2810. Where's HSI? There's an early one. We're going to get a secondary test. That would be, let's leave it here. This is a secondary test. 2810 right there. We just retested it. And where's HSI? We have that one there, but we looking for another one up right here. Look. Let's look at that next one right there. Amplified's back into the zone. RSI, that's setting up a triple confirmation. What's the hop level on that? 38. No, I want to look right at this 886 level. Tough one with the bat. It would have been ideal if this thing came down to target 1. Now, wow, we've been in here for over an hour. Looks like this thing is really coming back, folks. Here's 28, full retest of the 886 right now. And it's sailed right through. Stock charts is not working today. I actually appreciate that comment because I want to check that out. But right now I'm looking for an HSI trigger. No HSI. What's the 1 minute look like? I don't have an HSI up here. This one is coming before the zone. And actually, this is pretty important to point out. This is not where I want to see a type 2 HSI. If anything, I've got to use that whole bar. There's the check back, but it comes against it. And let's bring over, here is the, there you go. $28.10, folks, $28.11. Now we're starting to break that trend line. Let's see if we can come right up in here, and that would cinch it. And that's where I'm going to leave you guys. I think we're looking at that retest. That's the pattern for today. This bat pattern. And target 2750 on the downside here. We're coming back one more retest. My platform on this other side is really slow. We're going to get a bullish HSI. At least we violated the trend line. Now we're up to 10. This is really the kind of setup I wanted to see. Big pattern that's set up. Now we're at the retest by definition, folks. Even if it's a type 1, the secondary test makes this a better opportunity. And also think of it this way. Software is showing us a crab pattern, right? Well, there's a bullish HSI, but this still gives us a return target, 2780. We're going to come back, give us that retest. The only thing I don't like is the HSI that triggered right there. Give this a little bit of time. But 2811, 2810, that's a big number. And I want to get ready to hit this because I think that's what sets us up, brings us back down to target 2. Retest this crab pattern at 2780. So that's going to leave everybody with today. Where do we close today? Well, let's see how it shapes up by midday. I really think what you got to focus on is how this thing, where is this by lunch? And then 3 o'clock. If we can't make any progress, let's say this bat pattern rolls over down to 2775 and keeps on going, then we got to look at those bigger daily numbers tomorrow. But for now, this is a nice spot here. I'll leave you with that. I'm staying away from NASDAQ today. It's just moving too crazy. S&P is what I'm talking about. We'll talk a little bit more about crude oil, what to do with that tomorrow. Gold, we might be throwing the towel on that for now and looking for a reaction. I want everyone to know that because we've been long for a while. And last week we had a big $100 drawdown really quick. So if you're long gold, it's time to start to look to take some profits off. Crude oil, we're going to have to assess that later. We'll get back into that tomorrow. But we'll see how this 2810 setup turns out. Looks like we're going to get one more shot. That's what I have for today, guys. This has really been an amazing, amazing day. And again, we're going to follow up tomorrow at 9 o'clock. It's been an hour 15 today. And here comes my opportunity back at 2810. So I'm going to hold on here and wrap it up right here. I'm looking, give me an HSI and a 233, 89 tick, even 89 tick at a minimum. Are we up there yet? Yeah. And still utilize type 1, type 2, folks, across the board with everything that we're doing. We'll get into this tomorrow. Thanks again. Great session, everybody. Send me an email if you have any questions. And I'm going to roll out the trading view tomorrow instead of today. I'll share that with everyone tomorrow. All right. We'll see you tomorrow, 9 a.m. Have a great day. Go get them.